Stephen, how much risk premium then has been factored in at levels we see today, given that the upside pressure on oil prices is now relatively muted in the context of this significant geopolitical event?
You know, oil prices are still up 10% since Israel launched the strikes on Iranian nuclear sites about 2 weeks ago, or a week and a half ago. So we are still in a risk premium situation. Prices are higher than where the fundamentals show. But I think today's move in the market is pretty indicative of where we stand, as you say. You know, we jumped almost 6%. Now we're just up 1.3%. We could potentially end the day down, despite the U.S. embarking on this historic strike on Iranian nuclear facilities. Now, I think that's because there has been no change in the flows of oil. Iranian oil facilities and infrastructure weren't hit. The Strait of Hormuz is still flowing. There had been reports that Iran's parliament was to recommend closing the strait, but that's not their decision. That's up for the ultimate leader in Iran to make. But also, can you even close the strait? So the market is really looking at how Iran responds from here and what they're going to do if they're going to strike ships going through the strait that have connections with the U.S., Israel, or Western allies. Are they going to put more mines down in the strait? Or are they going to use their patrol ships to sort of harass the vessels going through? None of that isn't clear yet. And so until there is a response, a larger response from Iran, you're likely going to see this risk premium sort of evaporate.
And yet we have seen two supertankers doing U-turns as they've edged towards the Strait of Hormuz and turning around pretty rapidly. Is this indicative of how our other shippers are thinking about the risks? Where does that oil go? To what extent does even the risk and the threat overhanging the Strait of Hormuz disrupt the global oil trade?
Every company, every ship owner has a different risk profile, and they need to be careful going through there. So there will be some ships that take precautionary steps, right? Just because a ship turns around doesn't mean they're going to abandon their effort to pick up an oil shipment from Saudi Arabia or an LNG cargo from Qatar. Instead, maybe they're going to a safer anchorage to wait. Maybe they are going to avoid it altogether, but these diversions are few and far between. We have to look at them because the market wants to dissect any sort of indication as to what's going to happen with flows. But unlike the Red Sea, you know, which Houthi rebels were essentially able to stop a large portion of oil tankers to go through there in the Suez Canal, this is different. You need to go through the Strait of Hormuz to get to certain ports that ship oil, that ship LNG. There are no other options. So if we do see a lot of ships start to avoid it, that will have a more material impact on the amount of oil on the water, the amount of gas on the water. But just because we've seen a few ships doesn't quite mean it's any reason to panic.